All right. Welcome to the Greater Lansing Real Estate Market Report, December 2020. In this video, we're going to go ahead and review how the real estate market ended up shaping up in the fiscal year of 2020. We'll look at some of the impacts of COVID and maybe make a few predictions in terms of what we can expect in 2021. I know a question that probably a lot of people have given the recent events, and turmoil and political events. People are probably wondering if the real estate market and the general economy is going to crash in 2021. With that said, let's go ahead and take a look at what we saw in December 2020 to see if we can get some indication of what 2021 might look like. So, all right, in 2020, here we saw a median sale price of 170, with the number of sold listings being 630 units, and the inventory of homes in days at 39.3. That's for December 2020, the month of December 2020. Comparatively, we can see December 2019 there is we had a sharp drop at 146,750. That was kind of an outlier data. It was sort of an anomaly that we saw in December when comparing ourselves to, say, like November. So there was a year-over-year change at 15.84%. If you've been following any of the other real estate market updates and reports, that's a little bit higher. We were seeing closer to around 10% year-over-year change every month, so about an average 10% growth. So the difference there on the month basis, anyways, we saw a 15.84% growth when it came to the median sale price. For the number of sold listings, we saw a 21.15% growth, and then the inventory of homes days sold, negative 47.6, meaning homes sold significantly faster. It was taking about 75 days, or inventory of days. We had 75 days worth of inventory on the market, given our current sales rate, where here we're just slightly over a month when we ended December 2020. With that said, let's take a look at some of the rolling market statistics here. We can see that um, in December 2020, the average median sale price of the rolling 12, so over the whole year of the fiscal year of 2020, our median sale price was 166,828 when compared to the whole fiscal year of 2019 in the real estate market. It was around 157,691. So we did see about an average 6% increase in sales prices. Or in the median sale price. So we're seeing some growth there. We saw growth anyways in terms of the average or the median sale price. And then the number of sold listings was 575 for the month of December, or the fiscal year of December, so all of 2020. That was the average number of units sold on a monthly basis. And in December, it was of 2019, it was actually 577. So with that data, that's basically telling us we did see a decrease, or we did see a drop, a negative 1.8% in the number of units sold for the actual year. So we did have less homes sold for the year of December 2020 than we did in December 2019. However, we did see price increases, and homes were selling faster during the year of 2020. That's indicated by the inventory of homes in days being at negative 22.9. So homes were selling faster and inventory was lower. So if we look at this graph, we can go ahead and see there basically that this data is in fact showing us that right there on the monthly average, we're pretty much right in line with it. We saw decreases here in the early months of the year due to COVID, and then we saw a sharp increase as the real estate market opened back up, and then we sort of normalized out again here for December here. Over here, December, we usually see a drop. As you can see, this drop in a normal year. This is kind of what our normal year looks like. In a normal non-COVID environment, but this is what we actually saw here in this COVID environment. Kind of different, kind of different. So The next thing that we're going to look at here is our total real estate market growth for the year of 2020. You can see that in December 2019, the real estate market was about $1.244 billion, whereas contrasted in December 2020, we had $1.348 billion. Again, that growth is mostly attributed to the increase in sale prices and the median sale price. Even though the number of units did decrease, it was enough to increase um, our overall real estate market. So there is overall growth in the market, but it does appear that fewer houses are selling, but they are still selling fast. So the good news is for you, if you're looking to sell a house, that your house is still should still sell quickly. And because the inventory is still low, it's just that overall there are fewer houses being sold in general, which isn't necessarily indicative of a poor real estate market. It just could be more indicative that there aren't as many sellers on the market and buyers, so the number of transactions overall has decreased. However, the supply and demand is still imbalanced. That demand is still higher than supply, and that is causing the overall median sale price to increase. So basically, we've seen a shift in the supply demand curve in terms of like on a macroeconomic perspective. And it'll be interesting to see in 2021 if those trends continue. So that's basically how the year 2020 shaped out. It'll be interesting to see how 2021 is looking. I kind of think that we're going to see basically a similar response moving into 2021. I think we're going to continue to see economic indicators that are like high unemployment and things like that that are going to definitely affect the real estate market, shifting the macroeconomic curve of supply and demand, basically decreasing supply and demand simultaneously, though, such that by it's very likely, though, still that demand will outpace supply, given that interest rates just continue to fall. I don't see that, stopping anytime soon. There's definitely a fear uh, and a sentiment in government and that sort of a stuff with the decreasing or a slowing economy. So they're doing everything they can to stimulate the economy with PPP loans and stimulus checks and lower interest rates. And I think we're going to continue to see that until they feel that the economy has recovered sufficiently enough, or that it can take care of itself, or that this entire coronavirus has gone and passed. Otherwise, I think we're going to continue to see soft indicators in the in the economy overall, but I don't think that's going to necessarily translate into negative factors for the real estate market if you're looking to sell your property, or if you're looking to buy. You can feel confident in knowing that you're not going to buy and perhaps experience the crash that many people did when they purchased a home in 2008, 2009, where they overbought and up until recently were sitting in their house because they were underwater and they had no leverage, or they were under leveraged in their over leveraged in their property, and they didn't have enough equity into their property. So, but if you're thinking about selling or buying a home, hey, we would love to get in touch with you. One of our agents would be happy to assist you. You can get in touch with us. Give us a call at 517-244-6044, or visit us at DelinskiGroup.com, or you can shoot us an email at realtor@DelinskiGroup.com. That's realtor, REALTOR group.com. Look forward to chatting with you.